Hello, good morning in Europe, good evening, or good night in some other countries, especially in the United States. This is Ahura with another daily outlook video. Welcome to the Friday, last trading day of the week. Finally, yesterday we saw what we have to see, what we were waiting to see in the last days. We were waiting to see the increasing the market risk and falling a little bit fall in the stock markets. Yeah, this is the market risk. You can see the VIX chart here, US VIX. You can see here then about almost 20. Yeah, we reached almost 20 yesterday from all the way down from 17. So from 17 of 1740 and the last 2 days, yesterday, 2 days ago actually, yesterday we reached almost at 20. Market risk increase. Yesterday we had different economic data, but besides the economic data, we had the speeches and Ms. Brainard's hearing. About the economic data, U.S. producer inflation after this, day before that on Wednesday we had a U.S. CPI, Consumer Price Index. Consumer Price Index increased to its highest level since 1982. And yesterday we had the U.S. producer inflation. The producer inflation fall increased just 0.2% in December. It's the lowest level since the pandemic started. Therefore, with knowing that the producer inflation is increased, and I mean the producer inflation not decreased, we can say that the increasing of the producer inflation, the piece of increasing is eased. At the same time, same thing we saw on the NFP reports. We saw that the increasing the baggages, or we can say earning hours increase also, increasing path also a little bit eased, as we saw in the December data that published last Friday. So therefore we can see that the inflation going to be a little bit weak, going to see a little bit weakness, as the Federal Reserve was expecting on a December meeting, that they told with increasing economy, we can see that the inflation will be a little bit slower. So when we see that the producer inflation is lowered, we can see that the consumer inflation also in the next months will be lower. Therefore, expecting on the faster rate raise is increasing, but not what Ms. Brainard told yesterday and some other FOMC members, that we're going to see the first rate hike on March. I don't think so. Yeah, we have some reasons that we have some. I mean, they are saying that, but we can see at the same time, we can see that the inflation pace is slower. Inflation increasing is slower. At the same time, we can see that the economy is fine. And yesterday also we had the labor market data. You could see U.S. jobless claim for the weekly report for the first time in the past 2 months, again increased to 230,000 application for receiving the unemployment benefits, which it means that the labor market reached to a very good level. But from this level to increase a little bit from this level, it needs a little bit more work to see that higher levels after here. Therefore, we can expect a little bit pause in between the ending the bond purchases and starting the rate hikes. Therefore, I don't think so. Even if the FOMC members they say so, I don't think that in March we're gonna have the rate hike. The data that we have, they say that we can wait a little bit more, and probably three rate hike we can have. Okay, three rate hike, but not the four three rate hikes, but not starting from the March. This is my expectation. Sorry, my dashboard is playing around here somewhere here. Okay, guys. So let's see the market reactions. Market reaction after that, as we can see, the risk is increasing. This increasing the risk in the market. Most probably, what we are expecting is to stop the US dollar downside from here, somewhere here, and we can probably see uptrend can start from here, these levels, when the US dollar, especially as long as it is trading above 94, uptrend is more expected. despite the last day's fall. I told yesterday and the day before also, as long as you're trading above 94, bulls will be back, will be still in the market, especially with this data, with this data and events that we had. The bulls will be, from the fundamental point of view, bulls are there to be back to the market. From the technical point of view, yeah, we are in the downtrend. From the technical point of view, there is no doubt that the downtrend can go a little bit further, even almost maybe to 94, but still 94 is a very strong support. About the oil market, let me tell you something. Earlier today we had the trade data from the China. Chinese trade data that published earlier today shows that the import level in China a little bit decreased in December. At the same time, export was amazing. Therefore, the Chinese trade balance increased much better than expectations, and it means that generally the global demand is increasing, as the China is the biggest factory in the world, and while they're exporting more, it means that the market demand is more. They have a more demand in the market in different economies all around the globe. Therefore, it means that and that means that the Chinese economy will need more energy, and it will increase the demand for the oil market, and most probably we will be in a positive side. Oil can increase a little bit more, even a little bit more. This is about the oil and SP 500 and other stocks. Finally, there is, but the thing is that, as yesterday the Delta Airlines started its we had the Delta Airlines reports. Delta was the general outlook, and the results was much better than expectations. I was not actually, to be honest, I was not expecting to see that much good results from Delta Airlines because of the restrictions and so on. But they had a better but they had a better data results. Today we are waiting for the banks: Wells Fargo, J.P. Morgan, and Citigroup, and next week Bank of America. These banks, we are expecting, because of the policies that we have. Wells Fargo, J.P. Morgan, and Bank of America together with the Citigroup, they are more than 50% of the banking in the United States, which it means almost on the world. But the thing is that when these banks are positive, which we are expecting to see to be the positive, based on the policies that we saw from the Federal Reserve, the general expectation is to see the stock market will be supported in next 2 3 weeks. But generally, as I told you, which it means that this all is together will still support my positive outlook that I have from the market in general. This is the market expectations that, and my expectation that I have from the market. This is the Dow Jones chart. Same thing that with the SP 500, from the technical point of view. In the short term, we are in a, let's say in a midterm, in the short term. In the short term, we are a little bit in a downside, but in the midterm, we are in a side movement with the positive outlook in the long term. Same thing almost we can see in the Nasdaq. About the Nasdaq, let me tell you. So about the Nasdaq and Dow Jones, I am a little bit more optimistic about the Nasdaq and Dow Jones as the next months, because of the lower cash in less cash because of the policies that we are expecting from the Federal Reserve. Probably we will have lower cash in the market, and this lower cash in the market will lift the value stocks. Therefore, seeing the Dow Jones and the Nasdaq in the next month in the higher levels is much more expected than SP 500. This is about the Nasdaq and Dow Jones, and about the stock market. As I told today, we are waiting for besides the economic data. Today we are waiting for earning reports. Besides the earning reports, today we are waiting for UK GDP and UK GDP and industrial manufacturing production, US industrial manufacturing production, and retail sales will be very important for the market. About the currency market, your USD pools will be limited, are limited from technical point of view. Also, we can see that in the last 2 days, the bulls are slower. RSI is decreasing. RSI decreasing. OBV trend line is a flat, and it's because that the expectation for US dollar back is. US dollar to be back is which expectations is increasing to that we see US dollar in higher levels, which it means that the boost for the GBP USD also will be limited. On the current cryptocurrency market, Uh, as I told, the last day's bulls mostly seen because of the weaker US dollar. We didn't see these bulls in the market because that the cryptocurrency market was good. No, the cryptocurrency market was not that good that to help the bulls to increase that fast. Mostly this bulls seen because of the US dollar weakness. And generally, we don't still have that much information that we can say that the cryptocurrencies will be higher as if unless if, for example, the Bitcoin, if the Bitcoin can breach, can cross the 46,000 above, we can see, which is the 20-day moving average as well. Above $46,000, Bitcoin can turn to the positive mode. Otherwise, as long as it is trading under $46,000, the downside expectations still continue. For the Ripple, our expectation is under 82 cent and 92 cent, and for Ethereum, as long as we're trading under 3,400 US dollar, the bears will be in the market. This is general market situation and a condition. Hope it was useful for you guys. Please let me know in the comment what's your idea. What do you think? What you want me to cover more in the markets, and what will help you more. Thanks for watching and thanks for your attention. See you guys on Monday. Yeah, it's a Friday. We can have the good weekend. Oh yeah, that we're gonna have the weekend. Enjoy your weekend. Enjoy your Saturday and Sunday. See you guys all on Monday. Bye.